Now, some of the things that we want to talk about before we get into some of the Chinese data is some of the back and forth. When you look at Taiwan, there were a bunch of drills run from China in the Taiwanese Strait, in terms of what a landing would look like, practicing all these different pieces. And there was more there were more flights that came into their EEZ zone or their defense zone. And again, you're always going to test and you want to keep everyone on edge. But realistically, when you look at the sheer force it would take to launch a large scale attack is massive. And it's why now, could it happen in the future? Sure. Anything is possible. It'd be irresponsible if I said that it would never happen. But the likelihood of it happening in the next I'll say the next 7 years is unlikely. China is facing a lot of problems, and you could say look, they're going to want to defer. They're going to want to show that they're strong, but they could do that. But there's a lot of pressure beneath the surface internally within China. And that concern, and when you look at what Xi has done, he continues to hone in on crackdowns on corruption, retraining the populace, pushing party agendas, pushing the party agenda in general, looking at reforms and not expansion. That's not a point of strength to go out and say, we're strong, we're growing, therefore, you belong to us. It's more around, again, solidifying control, because he's essentially telling us, without telling us, he doesn't have the control he wants. And the harder you push on that, the harder the pushback comes. It may not be apparent just because there's media blackouts, there's things against it. But again, these are some important caveats when you look at, rattling the saber versus using the saber. And that's, I think, a pivot. And we'll go through more of that as it comes out, as we go through more of the geopolitical side. And we'll likely do a much bigger, episode on just the geopolitics, because things have been fairly stagnant. We could talk about Russia, Ukraine, where there's been essentially fighting over a lot of the same land right now. And that's the unfortunate piece once you get into kind of more trench warfare, more digging in, where you're not getting, until you get a big initiative, you kind of just fight over the same 2 miles of land. Not to say that it's not worth reporting on or talking about. It's just there hasn't been a huge shift that's going to change, where we sit today. We'll talk a bit more about Sudan, but again, we just wanted to bring that up in terms of China. So then it's interesting because when you look at industrial profits, as we've been talking about, again, looking back towards the data points for GDP, you can see industrial profits year on year came in at negative 19.2%. Industrial profits, year to date came in at negative 21.4%. So it was slightly higher year to date just because previously it was 22.9, but you're not seeing the industrial side. And one of the things that we've been talking about was, during the zero COVID, yes, consumers were locked in, people didn't go out, but factories were still open. Manufacturing was still occurring, and that's where the disconnect is. A lot of that bounce was internal, consumers getting back to normal, but the global world is telling you we don't need your stuff to the same degree. You could talk about, there's a bit of that is political, but another larger piece of that is also along the lines of economic. There's less people to buy. So there's a drive to try to make sure that foreign direct investment doesn't slow down, because you saw it slow from 6.1 to 4.9. So Beijing is going on a renewed tour of saying intellectual property is safe here. So the Vice Premier Ding delivered a speech about IP protection to the World's Intellectual Property Organization, the WIPO, which falls under the WTO. Beijing aims to turn China into a global IP powerhouse. So Ding said that we will firmly uphold the multilateral IPR, intellectual property rights system, with the WIPO at its core, and make the global IPR governance system fairer and more equitable. He also promised strengthening the building of IPR institutions, improving IPR administrative and judicial protection, improving patent and trademark review policies. All things that President Obama requested and pushed for when you look at the IP report that he initiated in 2015. So again, this is something that has been talked about we're in 2023. This was talked about in 2015. The central government may be serious about IP protection, but local governments are too inclined to protect their local champions over foreign businesses. So you could get a high level, but there's a point where, and this is why they talk about judicial protection, because and this was what came out during the Obama years and then again into the Trump years, was sure, they're saying this, but then it still happens. It still happens sizably. And then when I go to fight it, it takes forever. And then after 2 to 3 years, well, what's the point? And that's why there's always been this pervasive concern. So Beijing has battled local protectionism for many years with little success. Without progress on this issue, foreign businesses will remain skeptical about the IP regime. And that is the crux of it. So then you have to think about it on a political stance. So China, Xi, is bringing more CCP members to be watch companies to avoid corruption is what's being talked about. But it's really to make sure things are happening along the CCP lines. Then you look at IP protection. It's like, okay, you're saying the right things, but again, saying them and then the action is vastly different. And it's unlikely that we are going to see much improvement. And that's why we keep talking about not only supply chain, the reshoring, onshoring, but I think at this point we are going to continue to see foreign direct investment slow and go elsewhere. Now, when you start looking at some of the different pieces, the home sales value uptick is leading volume and new starts. So you have the reopening rebounds. So the question is it a rebound where you get this nice bounce, or is it the bounce and then fade? So when you look at starts volume year over year, and as you can see, the year is fairly easy comp, is negative. So sales volume is getting better and starts volume is getting better. But the value, and this is the key piece, is the value's gone up, but the starts have gone down. So they're essentially saying, look, we're not going to start anything new. We're going to clear the docket, and the housing market sentiment is back in positive territory because they're like, okay, well, I'm going to finish what started, and the government has been pushing a ton of money into this to just finish what you began. So, but then sales volume is kind of flatlining. But again, the value is going to be important because that's going to bring back, essentially a material wealth to the people. But the question is also, it's a year-on-year number. So year-on-year, the comps are super easy. So yes, is it positive on a year-over-year basis? Yes. Is it still positive looking back on a holistic number? No. So that's where it's like you have to put this into perspective when you're looking at some of these key pieces, because there's still pressure on the consumer where they're like, yeah, sure, like this is great, but I'm still underwater. And yeah, we're making progress, but I'm still not there. And can the government continue to push this money into the system is going to be a bigger problem and a bigger concern in general, especially, and we'll talk more about SPBs in a minute, or special purpose bonds. So then when you start thinking about, okay, well, so China's struggling still, home values getting better, but still negative. They're still trying to protect foreign domestic investment. So the fastest way to, people's hearts is food, as we've always seen. So Beijing is backing a year-long effort to boost cooperation on agriculture and food security within the ASEAN. Vice Premier Liu, who oversees food security, kicked things off in Beijing, conducive to safeguarding global food security, coping with agriculture risk, and promoting high-quality agriculture development. Liu promised to work closely with ASEAN members to boost regional food security through better coordination on policy, further opening up of ag markets, expanding personnel exchange. Premier Lee also wrote in with Rex calling for cooperation on green, smart, and digital agriculture, poverty alleviation, and rural revitalization. which it's all, and Trivium, again, these are things from Trivium, and they always do great summaries, and they finish it off with, well, it's all pretty vague, but the ag minister reps from all 10 ASEAN member states flew in especially for this. But again, China's Southeast Asian neighbors have mixed feelings about Beijing in general. And that's always been a piece. And China's massive market and what has so far been a successful rural redevelopment are both attractive. But it's a win-win for Beijing. But can they actually firm up and come to task with what they said? Because it's very vague. Like, what are the specifics of this? And that's going to be something that we're going to have to watch, because this could be is going to be very important given the shortages of food, as we've been talking about forever, continue to remain. So then you start looking at China, a strong broad-based recovery, but there's no confirmation of it. So when you look at onshore cyclicals versus defensive, people locally are not buying it. They're essentially saying, sure, like you say it, then you should look at onshore stock to bond total return ratios. There's still apprehension. And the reason why is when you start looking at, again, as we talked about last week, some digging into the data, it's not as clear that this is a huge win as you would think. So then local governments have also not wasted any time issuing special purpose bonds. So remember, typically special purpose bonds are back-end loaded because they're trying to meet their end-of-year target. But this time there was a push by Beijing to kickstart the economy, to wake everything up from that zero COVID. So they pushed for front loaded. So local governments haven't wasted any time, because why would you with free money? Data from the finance minister released April 18th shows local governments issued 1.32 trillion renminbi worth of SPBs in Q1, 35% of their full year quota of 3.8 trillion. And then just as a clarification, SPB issuance starts slow, but this was a bit front loaded. Excuse me, but the SPB issuance would be more aggressive than last year. Instead, it was almost flat compared to last year's Q1 issuance of 1.3 trillion renminbi. So the number looks splashy of 1.32 trillion, like, oh, this is it. But then when you compare it, it's like, well, that's really not that much higher than previous. Well, again, kind of breaking into, well, why is this not going to the same way? Why? And again, kind of leading to that question over the year-on-year GDP numbers. Infrastructure FAI grew 8.8% in Q1, supporting faster than expected GDP growth. SPB issuance in Q2 so far is far slower than last year, which is again going to weigh on things in bit. In Q2 of 22, local authorities issued their remaining full year quota of 2.3 trillion to buoy the economy as COVID continued to bite, because remember, that was when they had that resurgence and they went into that lockdown. But it's going to impact a lot of different things, and infrastructure I think is going to be a big one. And one of the things is, realistically, they're going to try to keep infrastructure investment strong in Q2 because of trade slowdowns that are continuing, other problems. But again, there's only so long you can do that. And we think that after that, you're going to get a fairly sizable hit. Housing completions has more upside because remember, you saw the difference is completed versus started. And that's where we continue to see some of these disconnects. And that's what they're trying to do, complete what has already been done. Output of automobiles, telecom, electronics, and general equipment contributed the most to the IP year-on-year growth. So again, you're starting to see some of these different shifts and trying to, again, incentivize and show people what can be done in China. But yet, if you think about it, it's like, okay, well, you're pumping all of this infrastructure money in, you're pumping all of this SPB money in, you're stimulating as much as you can, but yet you still have deflation, or again, pushing down that deflationary side. So again, how much is real and fake? Because if you had spending to the level you would see, you should be getting inflation, you should be getting activity, you should be getting this churn. But again, as we've been saying time and time again, China has been stimulating for years. So it's really hard against the law of diminishing returns. You have to sizably go above in order to get the same level of activity, and that's where we continue to fall flat. while mortgage rates are continuing to fall, again, trying to drum up some of those movements, but you're still not getting the same bite that people were hoping for. And then China foreign direct investment, just kind of putting it into perspective versus last year. And as we've been saying, we expect that to continue to fall down. And here's one of the key things with Japan, because markets are underestimating the odds of some hawkish shifts at the BOJ. There's been a clear step change in Japan's inflationary process. BOJ, they can't ignore this for too long. They can ignore it for a short period of time, but when you look at some of these different shifts, this is going to be a huge problem when we start looking at how the market is going to be impacted and why we see the BOJ raising rates. Especially now when you look at PPI, still remaining elevated. Yes, it came in under estimates, but from 1.7 to 1.6, but you're still getting some of that turn and those problems again on the CPI side. So then you look at CPI coming in at 3.2% versus the actual of 3.2%. And then X food and energy, survey was for 3.6, came in at 3.8. So again, the core, what people spend the most on is going higher. They're gonna have to get in front of this, which is why we see a lot of problems still emanating from Japan. Manufacturing came in contraction in Japan, came in at about 48, where services got better. But one of the things that we talked about, again, when you look at the wages, yes, wages popped, you had that nice increase, but real wages got absolutely decimated. And that's something that's going to have a huge overhang as we go into Q2 and beyond, which is why, again, with rates going back up, again, bringing down some of this inflation, but at the same time causing other issues throughout the economy, we still remain concerned, the Japanese volumes. PPI in South Korea came in at 3.3%. Imports, exports, as we were saying, continue to slow. GDP came in slightly below estimates on a year-over-year basis, slightly above quarter-over-quarter. Retail sales, slowing. Department store sales better than previous. Retail sales year-over-year worse than previous. Discount store sales worse than previous. Where consumer confidence bounced a bit from 92 to 95. But when you start looking at it again, it's kind of that mixed bag where it's like, all right, well, things are not terrible, so you're getting some movement. Excuse me, but you're not getting this massive turnaround, especially when you start looking at exports. Again, when you look at exports, it's at 2018 levels. And then Taiwan export orders was expected at negative 18.6, came at negative 25.7. These two countries specifically are very good bellwethers for tech exports and global exports in general. This is telling you that there is a problem. And again, it's not massive, but it's showing you the cracks that exist and the problems that exist that are only going to continue to feed through, which is why when we talk about China, their exports are going to be under pressure. They're going to have to push infrastructure, but there's only so much that you can keep those wheels turning. Taiwan's export orders in March plunged by the most since the global financial crisis, as global demand for semiconductors shows little improvement. Overseas orders to Taiwanese companies shrank to 46.6 billion last month, a drop of that 25.7. It was also worse than the median estimate of 18.6. The contraction was the largest since January. Again, January of 2009. None of this is instilling confidence in things. And then one of the important pieces is India's unemployment crisis. So when you look at unemployment in India, you can see it's kind of holding in at this 7.8%. The problem is you have a growing populace. We talked about the difference between China and India. China has now overtaken India as the most populous country in the world, which is something that on why they're going to have to look at and manage their unemployment. And that's why being friendly to the West, attracting more manufacturing, more production is going to be paramount. And I think they're in a good position to do it. It's just going to take time. So you could get some pain before it gets better, which can put some pressure on the economy. But again, we still think India is a bright spot when you look at the winners for that nearshoring capacity. So that's what we have for you today. If you have any questions, please feel free to reach out. We'd love to hear from you. And we hope you enjoy the rest of your week. Thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.